Hi traders, this is a brief tutorial, particularly for beginners traders, if you're struggling to understand where to draw your support and resistance lines. Now, I remember when I was first learning to trade, this was really a confusing topic for me. It's not confusing now, and I'm just doing this video to try and help you if you're struggling with how to draw support and resistance lines. Um, so first of all, how to actually draw them. The obvious place to draw a support and resistance line is at a swing high or a swing low, okay? And so I'll just start from the left-hand side of the chart. And the place to draw them is to draw them kind of like ignore the wicks and just put the line along the bodies of the candle. So here's another obvious swing low, and just draw it up there into the bodies. Now, when you're looking at these lines, one of the mistakes that people get into, and it was a mistake that I had initially, was seeing that line as a kind of definitive line in the sand, and one pip over, and that resistance or support is broken, and then one pip short of it. Oh, why hasn't it respected the line? It hasn't got to the line. I'm exaggerating a little bit, but the idea is that the lines take on this level of importance that is just not really the kind of importance they should do. So I'll talk you through an example here. So here you got price approaching here. Now imagine if a price was approaching, you suddenly see this bar here, and then okay, that's a bit mute. You think okay, that's some resistance that's the price has hit that resistance, and then but this bar here you think okay, it's closed above the resistance, so you're clearly thinking now that's a resistance level, and then price kind of sort of bounces around this level. You might just, if you were there, you might just draw it down on top of these candlesticks there and think okay, well look, you might have had a buy order there, and you put the buy order there, expect it to be respected, and then oh, it isn't respected. See, price has collapsed through. Now the problem is when you think of these levels too uh, too literally. What you instead need to think about it is not like a level, but more like a zone. So the better way to have thought of this level would be more like this. So you think of that. Oh no, that's not. Sorry, let me just get rid of that. There we go. So think of it more like a zone. And then if you thought of the level more like this, you'd be in a much better situation. And the way to explain this is, here's Peter Griffin from Family Guy. And if you look at Peter Griffin's belly, okay, imagine if you were poking your hand, not you'd want to, but if you were poking your hand into his belly. Now, as you initially poke your hand into his belly, your hand would go quite easily into his belly. It's quite fat, quite soft. But as you push further into the belly, you'd get more and more resistance as your hand pushed in. And eventually, you kind of reached a solid part of Peter Griffin that, you can't push in any further. You've got that firm back. So that's the best way to really understand, one of the best ways that I've found to understand support and resistance. So here it's like pushing into the belly, you get a little bit of, and then bang, you get a push back there. And then this is kind of like your back of Peter Griffin, and then this becomes a zone. And then when you start thinking of support and resistance in that way, it becomes a lot easier. So you think, okay, that if price was around here, you might think, okay, that's my new kind of zone up there. Oh, price has broken that, and then you would have drawn a line down here, and you might have said, okay, that's my zone there. Price has got near the zone, and just rejected off it, and then okay, price has broken out again at these highs, and you can see the price has broken out, and you might think, okay, well that's my new zone there. Its price has come in, it's starting to sink in, and boop, it's been resisted out. Same again, you get another breakout, previous highs, and then you see, okay, price is going down, didn't get, but carried on aggressively up. And then you see, conversely over here, you start to see, okay, new highs being made. Draw your line just on top of the things, on top of the candles, ignore the wicks, and you think, okay, this is that zone there. And then conversely, you would have done down here, and you might have thought, okay, where's an obvious place? I'll still keep that obvious zone. That's kind of an obvious zone. So you see price pushed in a little bit, rejected out, all pushed in a little bit, rejected out, pushed in a little bit more, rejected out, And each time, you're starting to understand that these are not literal lines in the sand, they are more like zones. And when you combine this with good fundamentals, you start to find very good places to enter the market where you're going to just a lot of orders are going to be accumulating at these kind of levels. It's kind of obvious when you start looking at it. And there you go, guys. That's a little tutorial, how to understand support and resistance. Remember Peter Griffin's belly. Think of them more like zones and less like lines. More like zones, less like lines, and you'll do a lot better. Okay, cheers, guys. Bye for now.